what happens when people lose all their money in their bank accounts. And like that, people say, my God, where can I put my money? Oh, gold and silver. Oh, too bad. Can't find it anymore. Because in a matter of days, when you see that kind of demand, it would bleed dry the entire industry. And I'm telling you, mathematically, economically, and sprinkling of real old school logic, the wolf is coming. Don't know when or how. But if you're not already in position, you got about 30 seconds to do so. And the exchange is being bled dry. It's that the public hasn't been shaken up yet enough to realize that the banks aren't safe, the brokerages aren't safe, that traditional investments need to be reevaluated. Even the best laid plans need to be reevaluated. That 60-40 split, how's that working out for you right now, where the 10-year treasury has lost 50% of its value?
Andy Schectman warns that when people lose their money in banks, they panic and turn to gold and silver, quickly depleting the industry. He emphasizes that banks, brokerages, and traditional investments are not safe, especially with the 10-year treasury losing 50% of its value. Schectman notes that many, including top money managers, are unaware of these risks. Brokers have thrived with declining interest rates since 1982, but rising rates will cause significant issues. Most people are unprepared and lack physical precious metals. Deficits and supply are dwindling, and the current abundance won't last. He predicts that rising interest rates and failing banks will collapse the over-leveraged banking system, leading to bail-ins and people losing their money. Schectman advises researching bail-in and the Dodd-Frank Act to understand the consequences. When people turn to gold and silver, the industry will be depleted in days.
Just direct the public. That's all you got to do. Like I often say, I live in a neighborhood where the guy across the street from me is one of the biggest money managers in Florida. He's in the Forbes top 50 list. And the only time he ever asked me about gold and silver is when the price is down. And he wouldn't know a gold eagle if it fell on his foot. Now, this is a guy that manages $4 billion. $4 billion. The public has no idea what's coming. And the recency bias and the normalcy bias that, look, if you've been a broker over the past, 20, 30 years, you've lived through nothing but boom time, where since 1982, interest rates have gone straight down until just recently, making selling equities and bonds a very, very lucrative deal, and one where you have a very good chance of doing well by your customers. Let's see what happens when interest rates massively go the other direction. And I think there'll be a very big problem. So you have the majority of this country asleep at the wheel. You have the majority of this country not owning any physical precious metals. And you see, again, deficit after deficit after deficit. You see supply dwindling off the exchanges. And the one thing that's really strange about all of this is that right now the retail and wholesale industry is flush with product, and premiums are as low as they've been in 4 years. I look at that as bottoming out. This cannot last when you see deficit after deficit after deficit and the exchanges being bled dry. It's that the public hasn't been shaken up yet enough to realize that the banks aren't safe, the brokerages aren't safe, that traditional investments need to be reevaluated. Even the best laid plans need to be reevaluated. That 60-40 split, how's that working out for you right now, where the 10-year treasury has lost 50% of its value over the last couple of years, and where the equity markets have done not a whole lot unless you're in the top 7 stocks that are holding up the entire indices. So, I just think the bottom line is this: it's getting real. And I think people need to understand, when you see United Arab Emirates stop taking dollars for oil, we are this close to the shit hitting the fan. And then when it happens and it breaks the fragile banking system, which is massively over leveraged and undercapitalized, and all of a sudden rates spike and you see banks fall one by one by one by one, and the bail-ins that no one knows about, Google bail-in, Google the Dodd-Frank Act, and see what happens when people lose all their money in their bank accounts. And like that, people say, my God, where can I put my money? Oh, gold and silver. Oh, too bad. Can't find it anymore. Because in a matter of days, when you see that kind of demand, it would bleed dry the entire industry that now is very flush. When this all started, my head trader called me up and he said, things are getting crazy. How long do you think we should go into the weekend? What he meant by that is how many COMEX contracts should we buy at 5,000 ounces apiece so that we can sell product over the weekend? Because you could sense things were heating up and things were changing. And so I said, I don't know, how about 11? So we bought 11 COMEX contracts, which meant that we were 55,000 ounces long, which means that anyone who wants, because the market closes on Friday night at 6 p.m. Eastern, and it sleeps until roughly 6 p.m. Eastern on Sunday, where it opens in Asia. That's the only time it's closed, that period. It's called the access market, where if you can take orders, but you better be hedged unless you're concerned that the price might open up higher. So we buy 11 COMEX contracts into the weekend, having no idea what silver squeeze really is going to be. This is on a Friday. And so Friday night, I'm doing interviews with Wall Street Silver and with Arcadia Economics and David Morgan. And I mean, literally for 10 days straight, I worked 18, 20 hours a day, never left a room, never went outside. My kids hated me except to go across the island to buy a house. And I'm working nonstop, hundreds and hundreds and hundreds of phone calls and interviews. And it was just, I've never experienced anything like it to this day. And so my head trader calls me up. Well, first of all, I get calls from people Friday night saying, do you see JM Bullion and Atmex are no longer taking any orders? They've stopped taking orders. And I'm like, wow, that's crazy. My head trader calls me the next morning, Saturday morning, at about 6:30 in the morning. And he says, dude, he says, we bought 11 contracts yesterday, 55,000 ounces long. You sold 90,000 ounces last night. You are naked. You are exposed by 45,000 ounces to the open price. And now it's Saturday. People are saying the price of silver is going to gap up $20, whatever. And I'm thinking, holy shit, we're 45,000 ounces exposed. And that could bankrupt the company if it really gapped up, right? And luckily, we were able to hedge it right away. But when it opened up $2. It cost me over $90,000. And that's what happens when you sell more than you have hedged long. And so all of those companies, the reason they shut down was because they could not hedge the exposure into the unknown. Well, that's exactly what will happen. We will wake up on a Monday morning to find the price gapped way higher for whatever reason. Maybe it's OPEC dumping the dollar or whatever it may be. And it's a system that when I left Minnesota, not only would I have bet anyone in the world that I'm not going to not come back and sell my house immediately. I'm going on a vacation not to buy a new house. But it happened. But by the same token, I watched some of the biggest companies in America, myself included, stop taking business. We shut down on Saturday. I said, no more. Saturday and Sunday couldn't take any orders until it opened up and we could hedge our position and go long. But I'll tell you, that's how fast things change, like that. And in one night, it overwhelmed the industry. Well, what happens if the shit really hits the fan this time? In one night, the entire industry will sell out of product. Because what you and I and the people listening to this show are, sun in my face, we're the pimple on the elephant's ass. When the elephant, which being the public, says, oh my God, that bank just failed in, they lost everything. And they run to the safety of something like precious metals in your own possession. I'm telling you, and I mean this honest to God, in a period of 24 hours or less, it will bleed dry the entire industry. There's that much money out there. And one really, really wealthy guy could destroy the whole retail industry. They
did. Look at the Hunt brothers.
Andy Schectman stated that when this all started, his head trader called him and said things were getting crazy. They decided to buy 11 COMEX contracts at 5,000 ounces each to sell product over the weekend. On Friday night, while doing interviews, Schectman got calls saying that major dealers stopped taking orders. The next morning, his head trader informed him they sold 90,000 ounces overnight, exposing them by 45,000 ounces. If silver's price had gapped up, it could have bankrupted the company. This led to companies shutting down as they couldn't hedge the exposure into the unknown. Schectman emphasized that if a major crisis hits, the entire industry could sell out in one night. He compared it to the Hunt brothers' realization that more contracts were issued than there were bars behind them. Currently, the open interest on the registered category of COMEX is rehypothecated at 1,790%, meaning only 1 out of 18 get their silver, risking a system collapse. Schectman believes the wolf is coming, and people need to act quickly. If you're not in position, you have about 30 seconds to do so. This is a serious event, and people need to understand the potential for a massive gold and silver price squeeze and the collapse of the dollar. What do you think of Andy Schectman's take? Will the East versus West war lead to a gold and silver price squeeze? Will the dollar collapse in 2025 as the BRICS nations take over? Share your honest opinion in the comments section.